Hello, ladies and gentlemen. I'm Joseph Novichkov, Senior Trading Manager with GDM. Today's outlook, briefly, we start with Asian markets. They were mostly higher on Wednesday after Wall Street surged overnight on a bounce in oil prices. As, of course, positive earning news shrugging off the recent global rout, at least temporary. China shares were volatile in yesterday's trading, erasing most early losses in late trade. China's market is likely, however, to remain higher for hopes that long global rout will end. The Shanghai Composite ended down 0.5% or 13.65 points at 27.36 after tumbling as much as 4.1% earlier in the session. The followed the index worst day on Tuesday since the suspension of the circuit breaker rule in early January, closing down 6.4%, hitting its lowest level since December 2014. Japan's Nikkei 225 index tumbled 2.7% or about 455 points to end at 17,163. After closing down more than 2% on Tuesday. In Europe, the markets opened slightly lower on Wednesday ahead of the US Federal Reserve's next statement released later today, and of course as oil was trading lower as well. The pan-European stock 600 index was down 0.3%, as well as global markets will be looking to the US and the Federal Reserve on Wednesday. The Federal Open Market Committee kicked off its two-day meeting Tuesday and is scheduled to release its statement on Wednesday afternoon. No change in rates is expected, but of course investors will be scrutinizing the statement for insights into policymakers' views over the economic environment and the future path of tightening. The dollar struggled to gain traction on Wednesday as, of course, markets awaited clues on interest rate policy from the Federal Reserve. The dollar index last stood at 99.041, nursing a 0.3% loss recorded on Tuesday and staying well below a 7-week high of 99.799 set last Thursday. The downside of the dollar against the yen could be limited as well, even if in such case. However, if such a dovish sounding by the Fed in their statement helps alleviate risk aversion and gives a lift to the US equities, the dollar is still down 0.2% against the yen to 118.90 yen, staying with its 118.85 yen to 117.65 seen so far this week. The euro is to 0.1% to 1.0862, remaining well within its monthly range of 1.0711, 1.0985, as well as the housing prices in the UK strengthened slightly, supported the acceleration in gains, the nationwide building society said. The average prices of homes, of course, climbed 0.3% from December, with the local currency also well within a range versus the dollar at 1.4330 at the moment. Gold stayed near 12-week peak on Wednesday, supported by the softer dollar as investors awaited the outcome of Federal Reserve's first policy meeting of the year. The U.S. Central Bank is widely expected to keep key rates unchanged at the conclusion of its two-day meeting later in the day. Mindful, of course, of global economic headwinds from China and Europe, gold was flat at 1120.50 an ounce in late Asian trade. With risk aversion intact as concerns over global growth persist, it won't be a surprise to oil traders if gold hits 1150, even 1200 an ounce in the first quarter of this year. Crude futures in the energy sector dropped around 2% on Wednesday, heading back towards the $30 a barrel level as profit-taking wiped out a chunk of the gains notched up in the previous session on hopes for output cuts. Prices were also dampened by a bigger-than-expected build in U.S. crude inventories and worries about the economy in China, which is the world's second-largest oil consumer. U.S. crude futures fell 72 cents to 30.73 a barrel, recovering slightly from a session low of 30.30 a barrel. It ended Tuesday $1.11 higher at 31.45 a barrel. And in today's calendar, the most important is the Fed's interest rate decision and monetary policy statement coming out at 1900 GMT. That's all for today. Stay tuned for the most important. It's going to be a volatile day. See you next time.